and also MetaTrader 4. Okay, I'll be using IG option for that and MetaTrader 4. So right now, let's start now. Like today, as I was saying that today I'm going to talk about the money management plan. Then we're going to take some live trade. So before that, let me first take some live trades. I'm going to be using MT4. Okay, I'm going to be using MT4. Then also I'm going to be using IG option, MT4 and IG option. So I have reduced the balance to $38. So I want to show you how you can grow a small balance. So let's say let's just expect it by next week if you can grow the account to maybe $100 in case the market is moving into a direction that we predicted. So then if we loss, if you blow the account, it's still part of the game. Okay, so today I want to show us some live trade. So maybe I'll be using trading view as analysis. Then I execute my trade on um, MT4 or IQ option. So let me first start with AUD card. Now about the setup I want to use in this trade is a is one of my favorite setup. Most of you might have been familiar with it. In case you don't know, so right now let me open the charts. Let me open my drawing tool. This is this is my trading account. Okay, you can see I don't want the number to show, so in case it, and this is my live account on IQ option. Okay, so I have withdrawn some amount of money today. So I have withdrawn some amount of money, so that means I'm still having some balance there, and I have a trade still running. So here, let me start from AUD card. Let's see what is going on AUD card. Then I'll execute my trade on AUD card if there's any opportunity to enter the trade. So right here, the analysis I made on AUD card is based on this pattern. Um, the market move down, market move up, market move down, market move up, then market move down again and move up and break. This is a significant support area. So once the price comes to that level, then above it is going to be my supply zone. Above it is going to be my supply zone. So from this level, I'll be looking for a sell opportunity. So I'm going to sell the trade from that level. So this is the setup I want to use today. Okay, this is the setup that I want to use for the live trade today. Okay, so the first analysis I made here, though I didn't enter the trade, the market already moved down. In case the market makes some retracement, then I will open some trade. Okay. So if you observe the market structure here, if you observe the market structure, we have so many supports. When I talk about significant supports, support that you can see significantly, support that you can see very well, that when you draw a single line, you will see that market respect the supports. That is why we already have support 1, support 2, or resistance 1, resistance 2. Okay, so which means if I should draw my horizontal line, the two supports should be on the same horizontal line. So it is called a significant support. Same thing goes to the resistance, be on the same resistance line. So it's become a significant resistance level. So if you observe this trend line I have drawn here, sorry, this horizontal line I have drawn here is a significant SNR. Okay, many supports are being respected the line. Okay, if you watch out here, you will see that market reverse on the same line, and here also market reverse. So I'm seeing a significant support level. Here we have the left support, and here we have all the right support. If you look at all the right supports, they didn't close below this level. So here we have the left supports, and these are the right supports. So from the right support, I draw it. Then this is my lower low structure. Then once I draw from the left to right support, then I'll look for the main supply zone. The supply zone, according to what I said, that we have two types of supply zone: supply and demand zone, continuation and a reversal. Like this is a continuation supply zone, continuation supply zone, drop, base, drop. So here we have the drop, okay, and here we have the base, then we have the drop. This is a continuation SND, supply and demand. So I will draw my supply zone from here. Okay, I will draw my supply zone from here. So I'll draw my supply zone because if you look at it very well, let me draw it perfectly so that you understand what I mean. Look at the last green candle before this drop. So here we have the drop, base, drop. Okay, or we can easily extend the rectangle shape to the left side a little bit. Okay, so here we have the supply zone, and see the market touch the supply zone and is moving down. The market has reached about 34 pips. Now it's making some correction back. So what I will wait for is if the market will make some correction back to this level or this, then I'll look for another sell opportunity. Okay, so I'll look for another sell opportunity. So this trade, we don't have any option, any opportunity to enter the trade. So I'll go to the next one, which is AUDCHF. AUDCHF also is another, yes, we have the significant support area. Okay, so you have the significant support area, and here we have the supply. We have the supply here, significant support area. You can see support 1, lower low, support 2, okay, and support 3. Support 1, lower low, support 2, and support 3. This is our supply zone. Then this supply zone is a reversal supply zone. It's a reversal pattern, which is rally, base, drop. Okay, so here we wait for the price. You can see the market has break resistance. Okay, then we wait for the price to touch the supply zone and the market should reverse to the downside. So on what I'm seeing here is that the market is trying to, okay, the market visit the level the second time, which is what I was expecting on AUD card. Okay, so I was expecting the same movement on AUD card. Once the price gets close to the next, to the visit the level again, then we look for a sell trade. Okay, but now there's no opportunity on AUD card and AUDCHF also. The market has already moved and we can't enter the trade right now, but I'm still thinking of entering the trade. Okay, let me check. If we enter the trade, the market already moved 27 pips. What if we enter the trade here? How many stop loss we're going to lose? 27 pip stop loss. Is that right? Um, okay, let me check line charts. Um, yes. Okay. So the markets drop, pull back, continuation, and then pull back. And this pullback is kind of strong actually. Okay, so if the market should come close to this line, I will look for a sell trade. Okay, I'll look for a sell trade here to the downside. So AUDCHF also, there's no opportunity to enter the trade right now. AUDJPY, so what I'm seeing, the market is in a downtrend as well. And there's no opportunity on this trade. If there's no opportunity, I'll check it before. AUDUSD is any opportunity. All the market has already moved down. Some created double top, some created single top. This one also has already reversed. SHF, no. KJPY, no. Okay, okay. What I'm seeing here in KJPY is like, let's see, if this is our resistance level, resistance, then base, and the market is trying to reverse. Okay, coming back to that, CHFJPY, see that CHFJPY hit our stop loss yesterday, but and it still moved in the direction that we predicted. Very strong momentum to the downside. So it just depends on how the market wants to move. Then Euro AUD, I don't think there's any opportunity here. Euro card, no. Euro CHF, okay. If this is going to be our resistance, and this will be, okay, I've already analyzed the chart before. Oh, this will be a late entry, a bearish engulfing. It seems that the candle will close as bearish engulfing from the resistance, and it should close below this low. Then stop loss should be above. Okay, so let me check Finally, IK option, there's any Euro CHF. There's no Euro CHF. Try to trade on. There's no Euro CHF. There's no Euro CHF. We have resistance. We have resistance. We have the higher high, and we have the supply zone. Okay. So what I'm going to do is sell this trade. On Nike option, there's no Euro CHF. So I'm going to use my MT4. Euro CHF, I will sell this trade. At least I want to take up to one more trade. After this trade, I'll take one more trade. So I have executed my trade on Euro CHF. What is it? Where is the trade? Okay, so I have executed my trade on Euro CHF. Then my stop loss level, sorry, my take profits targets should be at least 30 pips. So 1.04130, 1.04130. One three zero. This is about 30 pips. So my stop loss should be above. My stop loss should be above. That is 04559. 04559. So this is my stop loss. This is my take profit level. So let's hope the market should go more down. So let me go back and check if there's any rose HF on this currency. Okay, there is. But is there is, but the multiplier is too low. So maybe I will use $10 for it this trade, or let me make it $20. I want to invest $20 on this trade. So my take profit level, what is the take profit level? 04130, 1.04130. My stop loss level 0.4559. 559. So this might take profit 30%, 11%. So here, reason why I go with sellers, why I sell this trade is because I'm seeing um, resistance level. It's just like what I said, just the same pattern. If I have a resistance, okay, and a resistance again above the previous resistance, and here also this also resistance. So once the price comes to this level, then I'll be looking for a sell opportunity at the next supply zone, which is right here. Okay, I'm looking for a sell opportunity at the next supply zone. If the supply zone is here, so the market already break resistance. Okay, break resistance to resistance because there's a resistance here before the price reach the supply zone, just like this. R1, R2. So market reach the supply zone and drop. Here also we have the resistance also, and here we have the higher high. This is the higher high. No, it's just like Quasimodo pattern, but this one is quite different from Quasimodo pattern. So let me indicate that as um, R1, what is this now? Come on. R1, R1, R2, R1, R2. This is the fresh supply. Gosh, excuse me. Fresh supply. That is the untested supply. Fresh supply zone. Okay. Higher high. Flip zone. This is what I call the flip zone. From support to resistance. Because it's called the flip zone. Or in another language, you call it the change of polarity. So anyone you call it. Okay, so this supply zone we call it rally base drop. That is the first supply zone, and this is a sell, a sell. So in case the market go against us, that is part of it. So we lost the trade, and that is all. So what I have to do now is wait and see what the market will do. This is there's no holy grail strategy. So no strategy that will only work out for you 100% all the time. So have that in mind. No strategy that will work out for you 100% all the time. You can see that we face so many trade this week since on Friday after the NFP news. All this while we have been having a good trade, but since on Friday after the NFP news, NFP changed everything, changed our setup plan. Change our trading this thing. Okay, I was thinking on Euro USD if there's any opportunity to trade on Euro USD. Okay, let me do the analysis again. I was looking for a significant SNR, like significant support, resistance, and blah blah blah. This is a significant support, okay, and this is significant resistance. When price reach this level, it's a reverse, but this spike is somehow confusing me. So, and the market break again and reverse, and again it created next resistance. So we have the left resistance, right resistance, and here this is also another resistance level. But right here, I can see demand, demand zone, demand zone, demand zone. So I'm quite confused if the market has already touched it because I placed the demand zone exactly at the body of the red candle, the opening of the red candle to the week low. But you see that the candle almost touched the zone. But I'm not sure yet if this is going to be a buy trade. So I'm not sure about this trade. So let me keep looking if there's any opportunity to open any trade. Okay. And again, here we have a new next. Um, this is a significant support, breakouts again, rejection, and here. And what I'm seeing here is like a resistance, a supply zone. From this supply zone, I see some sellers entry. Okay, I can see some sellers entry, but the market is still ranging inside this zone. So I didn't have a clear understanding what is really going on here, because this can is very strong. Okay, so if there's no opportunity, then we skip the trade. So what I'm seeing here, there's no opportunity at the moment. Okay, I know this trade is going to be a buy trade. Now I can see buyers are entering the market. So I've already analyzed the chart, but I didn't want to take the trade. I didn't want to take the trade because I'm not 100% sure. Okay, because if Euro USD is a buy trade, USD JPY cannot be a buy trade. So that's why I'm not 100% sure. But let me see USD JPY. Next opportunity to sell the trade is should be right here. Okay, we have support, and here we have supply. So let me check 15-minute time frame. Oh no, 5 minutes. Okay, 5 minutes says um, this is support as well, but here we have support, breakouts, and a supply zone. What if I sold this trade from here? How many pips I'm going to make? 16 pips. That is not enough. So I'm not sure about this trade, but I can see resistance breakout. Okay, I can see resistance breakout. Or if I should extend the stop loss and the take profits level, okay, if I should extend the take profit level to this, how many pips? Almost 50 pips. So if I will wait for confirmation of 5 minute charts here, if there's any rejection, then I'll place my trade USD JPY. Okay, stay distant, then this, yes. I'll place a set trade here. Euro say, Chef, you got this. What are you still waiting for? Okay, look at this trade. Look at this account. This is ECN account, just forex ECN account. You know, if you are trading with ECN account, your trade will be executed at the same point. There will be no gap, there will be no jump, something like that. So your trade will be executed at the same point. So that's why I choose this ECN account. Any rejection? Okay, what I'm going to do now, I will simply place the trade after this candle. If this candle closes as red, then I'll place the trade. My stop loss will be very tight. Okay, 8 pips stop loss. My target will be this level, 45 pips. Here I can see a demand zone here, a demand zone. So if the market violates this demand zone, I will close the trade instead of allowing the trade to go more down. What I'm waiting for is a red candle here. That red candle will now look like a rejection on 15-minute time frame. Okay, it will look like a rejection on 15-minute time frame. So what I'm waiting for is a red candle. 2 minutes before the candle close. Come on, you got this. So let me see AUD card if there's any opportunity. No opportunity. The market has dropped. The market also has dropped. Kind of missed their opportunities. Oh, come on, Euro NZD. What is wrong with Euro NZD? Ah, they are struggling to break this resistance. And this resistance is going to be a fake out zone. So once the price break the resistance, it will reverse exactly from this trade take profit level. That's why I use that as our take profit level. Because here we have support, 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 and a supply zone here. So if the market reverse from this demand, the market reverse from this demand to the upside, okay. So once the price hit the supply zone, which is right here, then we're going to send the trade. So let's take note of this level here. So let's keep an eye on Euro USD USDJPY. Okay, USDJPY. So I'm going to set the trade right now. Still using $10. Okay, USDJPY. USHF is still consolidating. I don't know why it's still consolidating. USDJPY. Why is it not showing this? Okay, let me execute the trade on my phone. Oh, you can see very strong buyer's entry. Okay, I haven't executed on MetaTrader. What is really going on? Let me check 15 minutes. Okay, see USDJPY. No sign of the market really reversed immediately seller center. So I haven't executed on it before. So I'll wait if there's any opportunity. Although we still have new resistance level here, resistance level. Why this is the supply? Okay, why this is the supply in 5 minute charts? Probably maybe that is our next entry point. Then stop loss above structure. Okay, if this is going to be resistance one, resistance two, resistance one, resistance two, and this is the next supply zone. Here we have the QML resistance, resistance, and here we have the market preceding level. So what we need is the candle to close below this line. Once the price goes below the line, then we sell the trade. Okay, I can see rejections from sellers. So right now I'm going to execute the trade on MT4. I'm still not satisfied because I can see buyers is still trying to go up. So if I see any sellers entry after this candle, then I'll go with sellers. Okay, the same thing happened here. Double top. Maybe the market want to create a double top. I don't know why the market is still. The market is full of double top, double top. Now I can see some sellers entry. I think they should both move the same time, double top, and okay, this one is still not. So I'll wait for the candle to close. That will give me a good entry point. Sellers are so strong. I think this trade is going to hit the stop loss. Why the buyers are very strong. Only few sellers entered. See, only few sellers entered. I don't know why the buyers are still going up. Okay, still waiting for 2 minutes candle to next 2 minutes for the candle to close. People say check. I think the market is going to hit our stop loss. Then we accept that as well. We will accept the stop loss anyway. Maybe it's the part of the ranging near the resistance. But let's keep an eye on USD That is our next trade. One minute more. So I want the candle to close before entering the trade. If you entered here, the candle might just close here. You can see the number, the gap for you to miss the trade. I made a mistake here by opening the trade on USDJPY, so I would have waited for some minutes before opening any trade on USDJPY. Now you can see rejection. A small green candle from the resistance level indicating the weakness of buyers. So right now I'm going to execute the trade. So I have executed the trade. Okay. Still hoping the Euro CHF also will be moved to the downside, almost a stop loss. Euro CHF is still bullish. Once it's the stop loss, then we are out of the trade. So let me check Euro AD card and AD check. Bullish. Going to touch the top again. So that is that for today. Now let's go and discuss about the money management plan. So we have taken some trade now, Euro CHF and USD JPY. So let's see which one is going to hit the stop loss and which one is going to hit the take profit. If anyone hit the stop loss and if anyone hit the take profits, let's just see what's going to happen next. Let's accept that if anyone hit stop loss, let's accept it. If anyone hit take profit, let's accept it. So now let's talk about the money management plan. Okay, money management plan. So defining risks per trade using positioning, sizing. The idea is that a trader should risk only small percentage of their account on any one trade. Trading methods often preach the 2% rules, where a trader should risk 2% of their account on every trade. For example, if you have a $100, $100,000 CHF trading account, the trader should risk 2,000 CHF per trade. Some traders will vary the size of each trade depending on the recent trading performance. For example, the arithmetic money management method half the size of the trade each time there is a trading loss and doubles it every time there is a gain, which I will not recommend any one of you to do that. If you have a loss, accept the loss. Not that when you have a loss, then you double the amount on the next trade. Okay? So always use fixed amount. Don't double the amount. Then a top trading strategy and sound risk management plan should help a trader make money over time. But you can never be sure what will happen in the next trade, even the next 10 trades. So to mitigate, you can see that that is exactly what really happened to us. We have been making profits on since on last week, Monday, then now came to Friday, we start losing money, start losing trade. Even Fridays, Monday, Tuesday, we start losing trades. Okay, so we don't know what will happen in the next 10 trades we're going to take. So to mitigate the risks of the next 10 trade being in a loss, the first trader should keep the trade size relatively small compared to the size of the trading account. Okay, then taking this same principle and extending it, the trader should also protect themselves against several losing trade in a row by making the amount risks so small that even 10 losing trades is in a row will be something they can quickly recover from. Okay, then that is why we keep saying do not use big lot size. Do not use big lot size. If you use big lot size, it will be very hard and very difficult for you to gain back. If you use big lot size and you lost a trade, it will be very hard and very difficult for you to regain back your money. Do not use big lot size. Use a fixed lot size. Trade the amount you have in your account. Look at the trade I took. Well, if I should advise you, if you have a $50 account, do not use 0.05. Okay, I just want to reach the $50 account. That's why I'm using 0.05. Okay, so if you are the one, you should not use 0.05, 0.03, 0. Even though you 2 days you are able to make $10, $5, you are still okay because your balance will increase, right? Your balance will increase, your trade also will increase. So for you to make losses of about um, 10 losses at the same time using big stop loss, big lot size, it will be very difficult for you to recover all. So always define your risk per trade. Define your risks that okay, this trade I want to risk 10%. This trade I want to risk 5%. This trade I want to risk 6%. This trade I want to risk 1%. This trade I want to risk 2%. So always define it anytime you enter the trade. Always define your trade that okay, this is the amount I want to risk per trade. Once you reach the trade, once you the money did not go too far, or maybe you lost the trade, then accept it. Okay, accept the loss. It can be next day you're going to recover the loss. It can be next day you're going to start making profit, even make more profit more than the loss you had. So always define your risk per trade. Like today's trade, I want to risk 10%, 5%, 2%, 1%. Okay, so do not just open your chart and start trading. If you have a $50 account, do not just execute any trade without knowing the amount you want to risk. Okay, so that's why if you don't know how to if you don't know how to calculate pips in pips, then you should know how to do that. Maybe you can check one of our videos that we explain something about pips. I explain something about pips, so if you don't know anything about pips, because pips will always make you to know the amount of money you're going to risk. So now, set a maximum account drawdown across all trade. What is a drawdown in forex? A drawdown is the difference in account value from the highest from the highest. The account has been over a certain period, and account value after some losing trade. For example, if a trader has 10,000 CHF in their accounts and then loses 500 CHF, that is 5% drawdown. So 500 is 5% of 10,000. So the larger the drawdown, the trader is to recover the account balance with winning trades. So always set a maximum account drawdown across all trade. If you have a $50 account and you lose out of $50, you lose $10. That is what we call 10%, 1%. You lose $10. So always set the maximum account drawdown across all your trade. So which means anytime you lose $10 in your 50 trading account, if you lose $10, you can easily recover the $10. You be able to know that okay, I have lost $10 in this trade. So that means I can still recover some amount. So you'll be able to know the amount you're going to recover anytime you want to recover your trade. Okay? So the larger the drawdown, the harder is to recover the account balance with winning trades. So set a maximum account drawdown that today I want to risk, I want to lose 10% of my account. Today I want to lose 20. Today I want to lose 5. I want to lose 1. I want to lose 2. Because when you if you don't have a drawdown account, if you don't have a drawdown in your trade, you are losing big money in your trade. It is very hard and difficult for you to recover your loss. So it is better for you to set a drawdown account. Okay. So always have it in mind that this is the amount you're going to lose. Once you lose this trade, once you lose this amount, stop trading. So that next time, if the market is favorable, you can also recover your loss. So then next one is assign a risk reward ratio to every trade. Assign a risk reward ratio. A risk reward ratio. There's a very popular goal to keep your risk reward ratio at 1.2, 1:2 or 1:3 proportion. The best risk reward ratio you should use is 1:2. You risk 1% to gain 2%. Okay. If you are using 1:3, you risk 1% to gain 3%. So that means trader is willing to risk, for example, $2 per share and expect to earn $4 per share. that is 1 to 1, 1 to 2 risk reward ratio, or earn $6 per share, that is 1 to 3 risk reward ratio. Imagine that you risk $2 to earn $4 or 6. So if the risk reward ratio is around 1 to 1, that means you use $2 to earn $2. Okay, so they do not enter a trade because it is not worth that risk. Meaning, if you have a setup plan, and this your setup plan is that if you enter a trade at the resistance level, your take profit should be the next support level. If your resistance level is where you enter the trade here, your take profit is here. Then you calculate the ratio when you enter the trade to the take profit level. That is a 1 ratio 1, 1 to 1 ratio. Okay, you should not enter the trade because it's not worth that risk. You risk 1%. This is your 1% risk. This is your ratio reward. The same amount. You risk 2%, $2 to gain $2. You should not enter the trade. Don't waste your time to enter such trade because it doesn't worth the risk. So experienced traders who are looking for a good opportunity know where to put stops. Like I said, always place your stop loss. If you are looking for a trade, let's say for example you enter a trade here, and let's say this is a resistance level, and you enter a trade below the resistance level, you enter a sell trade below the resistance level. Okay, your stop loss should be always above the resistance level, right? But if you happen to place your stop loss here, if your stop loss is here, a little far above the resistance level, if the market should go up, maybe you sell a trade, the market is going up and about to hit your stop loss. Once you hit your stop loss, the amount of money you're going to lose here will be very small. But if you extend the stop loss to this level and you are waiting for the price to hit your stop loss, once you hit your stop loss, you see the big amount of money you're going to lose. So you lose a big money from there. So in that case, always use small stop loss. Don't use big one. Let your stop loss always be above structure or below structure. Okay? So because to avoid big losses, a lot of traders use big stop loss and they are losing big. Okay? So to avoid big losses, use small stop loss. Very important. Okay? Next one is okay, experienced traders are looking for good opportunity, know where to put stops. They do not enter a trade and then wonder maybe here will be a good place to for stop loss. They basically know that when they think about entering a trade, because they are looking for good risk reward ratio, keep that in mind. That is one thing about me. If I place a stop loss, I'm looking for a good risk reward ratio. That even though my take profit is still below, it can be more than the losses I have, the risks. Okay, like 2 times the risks, more than 2 times the risks I'm having. It can be 3 times. So all depends on how you're going to place your stop loss, how you're going to place your take profit level. A lot of people use the risk reward ratio as their take profit level. A lot of people use stop support and resistance where the market is likely to reverse as their take profit level. Okay, so that is one thing about different traders. Different traders with different methodology. Okay, now use a stop loss and take profit order to plan trade exit. Use a stop loss and take profit order. Let me tell you one of the reason why I don't use stop loss. The reason why I don't use stop loss is because to avoid stop hunt. One. Secondly, I'm always active. I always check my charts time to time, checking my chart time to time. So I'm always active. So once I see that my chart is somehow, let me say, my chart is somehow going below the what I expected it to be, or above, or the loss is too much the way I want it to be, or exactly the amount of money I want to lose, then I will close the trade manually. But at times I do use stop loss in case I will not be available to check my trade, or maybe I will not be available to check if the trade is running or if the trade is running loss. Just place your stop loss. Once the price hits your stop loss, that is all. So the reason why I use the stop loss is because in case I will not be available to check the trade from time to time. Okay. So, but you, I will not advise you to do that. Always place your stop loss. Okay, so that if the trade is running against you, you won't be caught out. You won't lose big amount of money. Then the stop loss you have set should be according to your trading size, to your trading balance size. So do not use big stop loss for that matter. So the best practice is to set stop loss in the same time you are placing your order. You should know in advance where you want to set your stop loss. When you are placing your order, you can set stop loss right away. Why? Because later you are probably going to hesitate to place stop loss. You might also place it in the wrong place because of emotion. So once you enter click sell, click buy, just execute your trade and just place your stop loss where it's supposed to be, and don't use big stop loss for that matter. Now, the last thing I want to discuss about the money management plan is that only trade with fund you can afford to lose. Only trade with fund you can afford to lose. Some days ago, someone asked me that he has the last money he has with him is $200. That can he trade with this $200 and use my signal and make profit at the end of the week? Well, I told him that this is not what trading is all about. Trading is not about using the last money with you, last cover, last money with you to trade. Trading is not all of that. All that. If you want to take trade, you must use, or you should only trade the fund you can afford to lose. If you can afford to lose $200, use the $200, trade with the $200. If you can't, then don't trade. Okay? A lot of people fall into that trap. They always think the market is going to be good all the time, and they use all the money they have to place an order, thinking the market will give them a good returns. But they forget that trading is not about good returns these days. Trading is all about you understanding and accepting what the trading gives you. Okay, so only trade with the fund you can afford to lose. If you can't afford to lose $50, then don't trade. A lot of people nowadays that even when they use $10 accounts, when they have $10 in their trading accounts, their investment amount is going to be $1, right? $1 per trade. So if their investment amount is $1 per trade, which means they are risking $1 on every trade. You can see that with this $10, some of them will be afraid to even place a buy or a sell. Some of them will be so afraid that to place a buy or sell. Why? Because they thought that this is the last money they had, so they're going to lose everything. So, and if they are afraid to lose everything, they will be trading. They will take trade when they're supposed not to take trade, like taking the wrong trade, because they are afraid to lose this money. Okay, they can't afford $10, but they are still using the $10 to trade. That is nonsense. So if you can't afford $10 to trade, do not trade at all. If you can't afford $20 to trade, do not trade. If you can't afford $50 to trade, use the money that you can afford to lose. That is what trading is all about. Trading is not about you putting money and expecting big returns. You can't put big money to expect big returns if you have not experienced that before. So if you have $10 trading account, use it and make sure that it is that $10 you can afford to lose. That even though despite someone told you that okay, you're going to make profit with this, or if someone can say okay, give me $10, you can give that person $10 easily without even thinking about twice. That means you can afford to lose that $10, or you can still make another $10 or more than that. But you have the $10 account and that is the only money you had, you put it in trading, expecting big returns. It won't work out that way. And it's very wrong to do that. Actually, it's very wrong. That is not what we call trading. If you are doing that, stop it. If you are doing that, stop it. Don't trade with the last cover with you. Don't use the money that you have to trade. Okay, have some extra backup. If you have a if you have a $10 account, meaning that you have more than that with you, so have some extra backup. Don't use that money to trade your to take any trade. Okay, so successful trading is only possible when the trader can make unemotional decision about what to do with the trading opportunity. If the trader needs the trade to win because the money is required for other purposes, the trader is liable to make bad decisions and increase the odds of losing money. Hope for the best and plan for the worst by trading with funds that will not hurt your lifestyle if you lost them. Okay, so then I also said do not invest $1,000 in a trading account. A lot of people do that, you can um, even though you can afford to lose the on $1,000. I advise you not to do that. Okay, I advise you not to do that. So do not invest more than that. Invest at least the money that will not hurt your lifestyle if you lose them. Okay, that is why for me, I'm not kind of trader. I don't compete with other traders who invest 10,000, 20,000 to take trade and then make big money, big returns. My own trading lifestyle is to use small account, then grow the account in a certain period of time. I might use the small account and blow it or lose the money, then I redeposit again. Once I redeposit again, and I will try my best not to blow it the second time. So it all depends on how you take charge of the money and in your account. So only trade with the fund you can afford to lose. So that is that. So these are how you can manage your money in trading. First, define the risk per trade. Define how many risks you want, how many risks you want to, how many risks you want to risk, how many money or how many percent you want to risk in this trade. How many percent? Once you define it, set a maximum drawdown. If I lose 10%, if I lose 5%, will I be able to recover it in the next trade? Okay, if I lose 100%, will I be able to recover in the next trade? So set a maximum account drawdown across all your trades. Then after that, assign a risk reward ratio. That okay, if I reach 2%, I will gain 2%, or 4%, or 8%. If I reach $2, I will gain $4 or $6. If I reach $1, I will gain $2 or $3. So it all depends on how you want to assign your risk reward ratio. Then use stop loss. Anytime you trade, anytime you take a trade, always use stop loss. Stop loss is very much important in trading. Always use stop loss. Always use stop loss and take profit order. For instance, you might miss a good, if the market is going into direction you predicted, you might miss the good trade. Okay, the market is going to direction you predicted and your money is running in profit. But when did you do not use a profit order, take profit order, before you know the market make a turn and starts going against you, before you know you lose the whole money, you lose the profits you have missed. So always use stop loss and always use take profit order. Then the last one is always don't if only trade with the fund you can afford to lose. Only trade with the fund you can afford to lose. If you can afford to lose $50, then don't trade. If you can't afford to lose $10, then don't trade. Forget about trading, stay away. Let those who can afford to lose $10 trade. Let those who can afford to lose $50 trade. Let those who can afford to lose $100 trade. So let those who can afford to lose $200 trade. But if you can't afford to lose any of this amount of money, then don't trade. Okay. So it might be that today's trade that will take you might lose everything. You might lose the whole trade. You might lose the whole trade, the two trade. Just do two trade and just think about how the market is going to move. But it seems the market is like going against us right now. So let's check it out. And even though I didn't lose big money. Okay. Okay, you can see USDJPY is still near, is still come back again to the resistance, to the supply zone, and it's still ranging at the supply zone. Let's see Euro CHF. Euro CHF, I think almost, okay, almost its stop loss, but it's still at the supply zone. Still at the supply zone. That is what the market. That is the movement of market these days. This December period, market cannot just touch a zone and reverse. Market will just play around before it finally reverse. That's what the market is doing these days. It might just like look at CHF JPY. It first did stop loss and moved down very strong. So we might still expect the same thing to happen to these two trades. Target your stop loss, find the stop loss level, and go down the direction you have predicted. Okay, see that I'm using a true ECN account. The true ECN account means that even though my trade, if I execute a trade, my trade will be executed at the same point. So even though there's the spread of that currency pair is big, the spread of that currency pair is big, I might still the spread will not take me out because I might still be in profit at that moment or be almost in loss at that moment. The spread might not take me out. So let's see Euro NZD. Like I said, if there's any chances the buyers will go more up, if there's none, then we stop. Okay, I can see that the buyers are trying to enter the market. Okay, you can see the buyers are trying to enter the market. I'm still holding this trade. I'm still holding this trade because we can also see rejection. You can see rejection from this demand zone. Let me see 15 minutes. Okay, let me see 5 minutes. Okay, 5 minutes. This is a demand zone of 5 minutes. Now I'm seeing the buyers entries, some buyers movements. Euro CHF also, let's check it out. Remember I said I want to grow the account to $100 before next week, but if this trade they are going to be successful, tomorrow I'm still going to take another trade. You know, these are short-term trade. These are short-term trade in case the market want to take some time before it start reversing. And again, what I want to say is that this is where we set our stop loss. Wait for the price to hit the stop loss level before you don't shift stop loss. A lot of people, when they see the market is going against you and they are shifting the stop loss, you are endangering the trade that you took. Don't shift stop loss. Let the trade run. Let the trade run. If the stop loss is hit, accept it. Let the trade run. Accept the stop loss. Don't shift it. So if the market will take time to reach to start moving in profit, then I will close the trade with small loss or small profit. But I'm expecting the price should close below this low. This is break of structure. This is also should be a break of structure. Then on 30-minute chart, I can see the market has break the. I can see the market is serving a strong demand around this area. This is also a demand zone. It's also a demand zone. So before the market should hit the demand zone, it should be when we took our take when the market hit our take profits. Okay. Now, one thing is that if the market consolidates so many times at this supply zone, once you are in profit on that trade, close it. Once you are in profit, once the market starts showing blue, close it. Okay, this is zero HF. I can see very strong sellers entry. The market came back again to visit the zone, and this is USDJPY. The price also did try to form a. Okay, this kind of rejection is stop hunt. Stop hunt. Okay, they will hunt your stop loss with this kind of rejection. I think the market is now 2 pips running in profit. Why USHF nothing happened, not yet in profit. I think it's still floating in losses about 1 pips, almost getting close to the profit level. Then Euro NZD, I can say rejection, and this is about 61 pips. 61 pips. Euro NZD 61 pips. Like I said on 5 minute charts, this is a demand zone on 5 minute charts. I can see some bullish is trying to enter the market. So now we have three trade running. Let's see AUD card. AUD card is still bearish. ADCHF also came back again to test the supply, I think. Let's check it out. Okay, came back again to test the supply. But this time, the buyers are very strong momentum. And also, we have so many rejection at the supply, meaning the buyers are testing the supplies on multiple times. CHF JPY. If CHF JPY is bullish, then Euro CHF should be bearish. You can see it's the stop loss and move down. Very annoying trade. Very annoying trade. So annoying with this trade. It's a good setup. Good, in fact, good analysis. But it stop loss and drop exactly the next supply zone, which is the next supply zone. If assuming that I'm okay and I kind of okay, what I mean is that I don't have any problem with me. Maybe I because I told you guys that I'm having a swollen leg, so I took some medication yesterday So I just came back from the hospital, took some medication, treat myself, assuming that I'm okay. In fact, I would have noticed that this trade is going to hit the second supply zone. Would have taken the trade the second time. But today I was so much in pain. Yesterday, today, so much in pain. In fact, I can't even sleep. In fact, I can't even sleep. I can't even stretch my leg. I can't stand. I can't walk. I was just sitting in this place. Nothing I can't do. So I was so much in pain. Day before yesterday and yesterday, even today, I'm still trying a little bit, trying to come up. So I just hope this thing will not be more that serious. Okay. So let's just hope the market should give us what we want. Nobody ever wants to trade and lose money. We all know that. But when the game started, accept losses when it comes. Accept it. It's a must. Accept it. Okay, USDJPY is moving nicely to the downside and is now about 7 pips. It's now about 7 pips. Okay. Also, if you check above it, it look like the resistance trend line, respecting the resistance trend line. So I'm expecting this candle should close as red. Why? Because if the candle close as red, that would be good opportunity. That would be good sign that this trade is 100% sure. Why? Because we have a an evening star pattern, right? Evening star pattern, strong green, weak red, followed by strong red. Okay, from this resistance trend line. Euro CHF is still struggling, floating in loss for the meantime. But that hope is going to drop because it's tried to test the level again second time and it's now reversing. Then I use this level as the take profit level. Why? Because I check here, I can see a demand. Even below, we have so many buyers below it. So many buyers. Buyers area. This is buyers area. This is buyers area. So before the market could reach the buyers area, should have entered being profit or taking our profit. Sorry, what am I talking about? Or hit our take profit level. Okay, so guys, now I'm going to close now because I want to upload a video on the binary option. If I can upload a video today, maybe tomorrow. If I can't, if I open the chart and see the market is not good, I will stop. I will not take any trade. Then I'll wait for tomorrow. It's been a long time since I upload videos on binary option. Okay, so see you guys to what am I talking about? I think today is the last day, but this should not be the last. You should be attending class. This is just the last day of the course. I want to have a by next year I will have a section for everyone, each everyone a day. That today I will have a section, a private class with someone. The following day I will also have a private class with someone. I just want you guys to improve. I don't want you guys to be looking at me as if I'm the only one that knows how to trade. So I just want you guys to at least come up with at least even better than me. So by next year, maybe January or February, I'll be having a private class for each and every one of you to see where you are good and where you are not good, or maybe where you are still having problem with. If you are still having problem with managing small accounts, that will be solved. If you are still having problem with losses, expecting the kind of loss, or maybe you don't want to lose at all, or maybe something like that, the problem will be solved. So that would be next year. So I'll be having a private class for every one of you. I'll be having a private class for every one of you. So they don't take this as the end of the course. Don't take this at the end of the course. I'm not the kind of trader who will take courses and forget about the student. I'm still available. Anything you need from me, I'm still available. So the signal still continue. And maybe by next week, the signal is going to stop. We're going to stop the signal by next week because of the end of the year or something. So resume next year. Resume next year. So let's hope for the best. So we resume next year. Next week it's going to be the last week of our trading signal and everything else. So next year next year we're going to resume. Okay guys, see you on Sundays. On Sunday we're going to meet again. So like usually on every Saturday, but it seems that every Saturday now always occupied. I'm always occupied. So it seems that I don't have time much again on Saturdays. But on Sunday it's free. So every Sunday we're gonna be having class. Same thing with binary. Maybe after binary we have the forest class. That's how we do it. So do not let today's class or today's section to be the last time you ever communicate with me or anything like that. So in case you're having problem or anything. So let's just hope and see. Once the trade hit the stop loss or take profits, I will share it in the group and let you know guys how we make a profit or a loss. So we don't know what is going to happen. Maybe we're going to lose the trade or maybe we're going to win the trade. We don't know. So just accept anything that will come up. It's still part of the game, right? It's part of the game. So nothing like 100% sure, 100% strategy in trading. Everything is not only gray. So don't expect strategy. All the strategy I'm showing you, most of the time it work, most of the time it doesn't work. Okay, so I think now I should call it a day. See you guys tomorrow, Sunday. See you guys on Sunday. Have a nice day. Bye bye.